Good evening, everybody, and welcome to this evening's meeting of Hammersmith and Fulham Council's Audit Committee. I'm Councillor Cassidy, the chair of the committee. The meeting is being held informally, technically, to allow us to have it online rather than having us meet in person. But everybody is in attendance. I think we have a full house from the councillors this evening. The meeting, as I'm sure you all know, it's being streamed live on YouTube. So the usual housekeeping points. Councillors, if you can, keep your cameras on. Obviously, if you've got connection issues, feel free to switch them off if you think there's going to be a problem. But keep them on if possible. I'm sure the public are delighted to see us all. Everybody, if you're able to keep microphones muted if you're not speaking, just so there's no interference. And officers, when you're called to speak, if you're able to speak, switch your camera on if possible. That would be very, very helpful. If people can wait on me to call them before speaking, and also just for officers, if you are able to introduce yourself when you first speak, just so everybody knows who you are, both for the benefits of the members of the committee and everybody else here, but also for those watching on YouTube. I'll just do a quick introductions. As I said, I'm Councillor Cassidy, the chair. Councillor Thorley.
Good evening, Chair. Yes, Councillor Matt Thorley, Councillor for Parsons Green and Wallen.
And Councillor Ree.
Thank you, Chair. Councillor Rowan Ree from Askew Ward.
Councillor Sanderson.
Thank you, Chair. Councillor Alex Sanderson from College Park and Old Oak Ward.
And Councillor Caleb Landy.
Thank you, Chair. It's Councillor Jonathan Caleb Landy from Ravenscourt Park Ward.
And Councillor Carmel.
Yes, good evening, Chair. With connection problems, it's Carmel from Munster Ward.
Thank you very much, everybody. So first item this evening, we've got apologies for absence, but I don't think we have any apologies, so that's fine. Number 2, declarations of interest. Do we have any declarations? I'm seeing heads being shaken and no hands, so I'm assuming no declarations of interest. Then we're on to the minutes of the last meeting, item number 3. Do we have any questions or comments about the minutes? Again, no hands and a few shakes of the head, so I'm going to assume that the minutes are all noted by the members of the committee. Excellent. So we can go straight into the first item of the evening, the first substantive item, item number 4. So we have a final audit report related to Cambridge Special School. I'll ask David Hughes to introduce the report.
Thank you, Chair. Just briefly, so as the committee is aware, we bring to you any limited assurance reports that are issued by the internal audit team, and we carry out a sort of programme of schools audits on a cyclical basis to ensure that there is appropriate control in place at each of the schools that we carry out the audit at. You'll notice that this is a limited assurance report with one limited assurance finding, and that relates to the payroll section, and that specifically relates to a scheme that was put in place by the school initially for loans to staff for the cycle to work scheme, which then through a sort of a set of misunderstandings and other matters progressed into loans for other matters as well. Now that scheme, following the audit being undertaken, was suspended. But that's the primary reason why we put the limited assurance on this piece of audit work, particularly because the loans themselves weren't being reported separately under the school budget. So it was difficult to see how those loans were being tracked and monitored. So I know Mr. Campbell is here from the school, so I'm more than happy to hand over to him in terms of the actions taken as a result of the audit.
Yeah, have we got, I think, Alan Campbell? There we go. Hello.
Yeah, good
evening,
everyone. Yeah, just to report that obviously when we found out that the loans were in fact not authorised, we stopped them prior to the audit coming. So they were stopped in summer 2020, which as a result of our own identification of that issue. And also just to make sure that it was quite clear that the audit report said there was no intention to defraud or no self-dishonesty, and all the loans bar one have been repaid in full. There is one outstanding which will be repaid in November 2021, and then the matter will be drawn to a complete close. Just in terms of what we have done since, we've been obviously very transparent with the auditors. We've complied with all the recommendations in their report and reported back in August that all the things that they implemented in all 4 of the areas, governance and leadership, procurement, staff expenses, and payroll loan had been implemented. That has been monitored by the governing body, and we're very clear they'll be commissioning our own independent audit report as well, so we can get a clean bill of health, because previously we've had very good audit reports. We have provided context of why the situation arose. It was out of a misunderstanding, which we have rectified, and we have absolutely no intention of doing anything like that again. Governors are fully monitoring this, and as I said, the chair of governors, vice chair of governors, chair of the finance committee have been fully involved in all discussions, and I think all the safeguards and measures now in place to ensure that there'll be no repetition of this error.
Thank you very much. David, I don't know if you have any other further comments, or are you and your team happy with the outcomes?
No, we're more than happy with the response that Mr Campbell and the governing body have made, and the measures they put in place since the audit. And as Mr Campbell rightly said, the matter about the loans was picked up before the audit commenced, so the school took prompt and appropriate action then once that issue had been discovered.
Fine, excellent. I don't know if we have any other comments or questions from any of the other councillors. Councillor Ree has a hand up.
Thank you very much. Just a couple from me relating to the procurement section of the report. So in terms of the late payment of an invoice not being paid within 30 days, was that an oversight, or was that a cash management issue? You're waiting for money to come in before paying something? It
was more of an oversight related to high levels of staff absence during the pandemic. So it was a one-off, and again it was a kind of rogue item due to really ground staff absence and remote working and the monitoring, and the rest of it was all in check.
Indeed, I'll confirm that. Yep.
Excellent. And just the following paragraph after that, bottom bullet point of page 4 of the report says that no contracts have gone out to tender over the financial year. Is that just a coincidence that over the period we were monitoring, there were no tenders put out, and so there are actually tendering processes in place for when you are looking?
Yeah, the tendering process in place. And again, there was we have always go out to 3 tenders as standard practice, unless it's a preferred as someone who's been working in the school before. And just over that period, there was nothing to report there.
That's excellent. Thank you very much.
Thank you.
Thank you very much, Councillor. And I've got a hand up from Councillor Carmel.
Yes, thank you, Chair. This cycle loan scheme does seem to have been a misunderstanding. I just wanted some assurance that we've checked with other educational establishments in the borough to ensure that this misunderstanding hasn't been repeated elsewhere, or will we wait until individual audits come up before finding this out?
So in response, Councillor Carmel, we do both. So we provide information each year to the school's finance team to share with schools about the findings. Yeah,
that's fine. Yeah. Okay.
Okay.
I've also got a hand up from Tony Burton.
Oh, hi. I hope you can hear me. I'm having trouble turning off the video. Hi. I'm Tony Burton. Yes. I'm the head of finance for children's and education. I just wanted to add to what had been said, really, to confirm that in the scheme for financing schools, which is a statutory requirement, we do update annually. It's referred to in the report, and we take any recommendations from such audit reports and make sure that those things are fully covered and fully explained in the scheme for financing schools. And we'll use those informal workshops with schools, business managers within the borough to ensure that those particular points are stressed. So we do have a process for sort of positive feedback to schools in that way.
Thank you very much. I've also got a hand up from Jackie McShannon.
Thank you very much. Jackie McShannon, Director of Children's Services, Hammersmith, Fulham. And just to confirm that Mr Campbell and his school have been very open and transparent with us and with our continued lines of inquiry and support. And we do triangulate. So we've got the internal audit, we've got Tony from finance, and also Lorraine Mitchell, who's in a new governance post. And some of the learning that has been identified through this audit Lorraine will ensure that other government bodies are also aware of it, so that we try and triangulate through lots of different means and conduits. Thank you.
Thank you very much. I don't know if we have any other questions or any other comments from anyone. I'm not seeing anyone, in which case I'm assuming we're all happy to note the report and the work that's been done to deal with any issues that have arisen. I'll say thank you very much to our guests who have joined us for this item. I hope that was as short and painless as you could have hoped for.
Thank you for inviting me. I hope never to be here again. That's how much I enjoyed it. But thank you very much for the questions and the chances to explain what happened and what to make sure it doesn't happen again.
No, you're welcome. We won't take that as a negative. We won't take that as a negative.
Thanks very much, everyone. Bye-bye.
Thank you very much. So assuming we're happy to move on to the next item, everyone. So that's item number 5. We've got an external audit progress update. So again, I think we've maybe got David introducing it, but we've also got the external auditors, Paul Dossett and Ellen Millington, who are attending the meeting.
I think, Chair, it might be Emily who might introduce this one.
Emily Hill, Director of Finance. As you know, we have an external audit, an annual external audit of both our financial statements and the value for money conclusion that's undertaken by an independent auditor. Our current external auditors are Grant Thornton, our partner Paul Dossett, and Ellen, our engagement manager. I think that's the right term, and they're here really today to tell you the progress of the audits, to I think confirm the sign off of last year's audit, which was still open and shared with you outside of the meeting. So to come back formally to confirm the opinion that's been given on the accounts and give you some information on how this year's accounts will progress from here. So if it's okay with you, I will hand straight over to Paul, I think, or Ellen.
Ellen will.
Ellen, sorry, Paul.
That's okay. Thank you. Thank you, Emily. My name's Ellen Millington. I'm the audit manager from Grant Thornton for the council's financial statements and value for money work. So there's 3 reports that are on our agenda, on the agenda this evening. The third one of those is, as Emily mentioned, kind of a summary of the work that we undertook on the 2019-20 financial statement, so last year's audit opinion, and that's the annual audit letter. So I wasn't planning to go through that one in great detail because that summarises information that's already been presented to members as part of our audit findings report, which was originally brought to the audit committee back in November, and then an updated version was circulated by email in advance of finalising the audit in July this year. So to clarify on that, we finalised our audit of the 2019-20 financial statements in July this year, and the reasons for that being so delayed was resolution of some issues which were around an investment fund that the pension fund had a investment in, so an infrastructure fund held with Aviva, which had a qualified audit opinion on its financial statements, and we had to work through with the finance team, with Emily and with the pension fund, the implications of that for our audit opinion. And we were able to issue an unqualified audit opinion, and it included a reference in the audit opinion to a disclosure which had been made in the final version of the accounts around the circumstances behind that qualified audit opinion on the infrastructure fund, which the pension fund had an investment in. And we also issued an unqualified opinion on the value for money conclusion for 2019-20. So that's kind of the third item on the agenda, the annual audit letter. But bringing forward from that, we move on to the progress report, which is the first of the 3 items on the agenda. And this sets out the timeframe that we're now planning to conduct the audit for 2020-21's financial statements. So following the conclusion of the audit in July this year for last year, we're planning to begin the audit for this year's or 2020-21 financial statements later this month or the start of next month, with a view to completing the audit by the end of this calendar year, and then kind of progressing back to a more normal time frame from next year's audit onwards. So the report kind of sets that out really, and then at the end of the report is a sector update, which firstly highlights some of the changes that you can expect to see in the reporting framework for this year's cycle onwards. So the first one is really around the revised approach to value for money. So last year in 2020, the National Audit Office issued a revised Code of Audit Practice, which is the guidance that the audit is conducted under. And that changed the value for money work from being a kind of binary qualified or unqualified conclusion to a more narrative approach, where we will report on the Council's arrangements to secure value for money in 3 areas, and those are financial sustainability, governance and improving economy efficiency and effectiveness. We'll then review and see if there are any recommendations that we might make for improvement on the basis of the arrangements that the Council has in place. So the output of that will be a much more detailed value for money report than has been part of our audit work in previous years. And that will be reported within 3 months of the financial statements audit opinion within the new revised timeframes for that. So that will probably be a more in-depth kind of report than what's been presented before in regards to value for money. In terms of the financial statements audit, one of the key changes for this year will be the revised auditing standard around accounting estimates. So this will also involve input from the audit committee as we move into undertaking our audit for this year. There'll be a paper on the next audit committee agenda around management's approach to calculating accounting estimates. So those are the large numbers in the accounts that we've looked at before. So things like property valuation, the valuation of the pension liability, any provisions, expenditure accruals and things like that. So that will be additional kind of reporting around the approach that the Council has taken to making accounting estimates and the work that we've done around auditing those as well. And then the rest of this report kind of goes on to highlight some publications that Grant Thornton as a firm has issued recently. So on the financial reporting side, one of the key issues for 2020-21 is accounting for the different COVID support grants that have been allocated to local authorities, whether that's ones which are allocated to offset some of the challenges that have been faced by the council itself, or the pass through to small businesses, for example. So the kind of grant funding that's been allocated there, different accounting requirements based on the nature and the terms of each of those arrangements. And we've produced a accounting paper which is to support authorities with accounting for that. And then on the kind of financial sustainability value for money side, another report which is around kind of learning from public interest reports. So obviously recently a number of local authorities have seen public interest reports produced by their external auditors, and it's really around what are the themes from that. So that was a report that Paul was involved in compiling as well. Further on from that, there's some more links in there for members' interest around some of the general benchmarking for local authorities in response to the COVID pandemic, so different types of benchmarking reports. And then finally, a couple of updates around what's been going on in the world of audit. So the Redmond Review, which was published around this time last year, and the government response to that, so some of the changes in terms of regulation that are being planned for the audit sector, local authority audit sector, and then the update from public sector audit appointments on their next procurement process for appointing auditors to local authorities. So I think I'm happy to take any questions on those 2 reports, but I think Paul was just going to cover the final report that we have on the agenda. So I don't mind if we do questions now or after.
Well, I'll just see if do any members have questions. Are we happy to wait until the end? I'm not seeing any hands up, so I'm assuming we're just happy to wait. Paul, then, if you want to come in.
Thank you, Chair. So the only other item on the agenda from us is the audit fee letter for 2021, and obviously Ellen reflected on some of the changes, both in terms of the value for money work, which is new and enhanced, the work on estimates, and there's various other standards that we have to apply to for the new year. And this letter essentially sets out our analysis of the cost of applying all those additional audit requirements. Also, the letter also reflects on the ultimate cost of 1920. What I would say as a point of principle here is all of these proposed fees have to go through PSAA, the appointing body, so they have to assess all of those things. They're currently in the process of assessing doing their own piece of benchmarking and assessment of what they think the cost of all these additional things are. And so they will use their own benchmarking to reflect on where they might end up with what they think is the right fee for this additional work. I suspect that will take some time for them to reach a view about that, because the way they work is they don't tend to approve anything until everything is finished. So Ellen set out a time frame for the completion of the audit by Christmas, and then by the value for money report after that. So I don't think we'll be getting any clear steer on this particular fee, and that's assuming everything goes swimmingly in the audit, much before next spring sometime, because that's just the way that the process works. I think what it does reflect, what this letter does reflect, is the change in nature of external audit, both in terms of scope. The value for money is a big increase in scope, and the requirements from the regulatory point of view of the depth of work we need to do, as well as the implementation of new auditing standards, which add to the further work that we have to do. Ellen talked about the fact that we would aiming to get the 2021 audit finished by the end of this year. Technically, the statutory deadline for 2021 audits is the end of September. But if you were worried in any way that you'll be in a sort of very small club of people not meeting that deadline, we're anticipating that come 30th of September, less than 30% of audits will be signed. And that's just reflecting the ongoing challenges in the profession and in the degree of work that we have to do, and the challenges indeed for many local authorities to produce accounts to meet the requirements. Amongst our portfolio, we have quite a large number of authorities who, unlike you, who have produced their 2021 accounts, have yet to produce their 2021 accounts. And we do indeed have some authorities with 19, 20, 18, 19, and even indeed 17, 18 audits still outstanding. So I'd stop there, Chair, and obviously we're happy to take any questions on all the papers.
Thank you very much. I'm happy to just open up straight into questions. Do we have any questions from members? I've got a hand from Councillor Ree.
Thank you very much. Sorry, I was hoping just to get a bit more detail on these new value for money assessments, please. So, in a sense, we had one last year, which we've got in the audit letter, but the ones that are happening for this current audit year are going to be done on a different basis. Is that right? And would you be able to sort of talk me briefly through in sort of headline terms how you go about working out whether something is value for money or whether the authority as a whole is achieving value?
Sure, of course. So the new approach requires us to provide a commentary on three areas: financial sustainability, governance, and economy efficiency and effectiveness. And what we have to do is consider the council's arrangements in all three of those areas. So what arrangements do you have in place to address those things? And we have to produce a narrative report which comments on those your arrangements and the adequacy of those arrangements. And we have to make, for example, if we identify a significant weakness, we have to make a significant recommendation If we identify minor weaknesses, we have to identify improvement recommendations. So the way we go about doing this is we have to have a much more holistic engagement with the council. So whereas previously the value for money conclusion in many, many ways was driven by finance and the financial metrics and any regulatory reviews you've had. So for example, if you'd had an Ofsted review and it was inadequate, that would automatically lead to a qualification under the old regime. So we're going to have to engage across the council in this process and understand, for example, particularly in the economy, efficiency and effectiveness, how the council uses benchmarking, how it ensures good performance by service departments, the role of members in all of that. It's a much more holistic judgment that we would need to reach. There is a sort of approach that we use that meets the NEO's requirements. The NEO set the rules on how we approach value for money. What we will be doing in terms of benchmarking ourselves is we have lots of comparative data for local authorities across a whole range of areas, and we'll be using some of that benchmarking data ourselves to feed back as part of our assessment of economy, efficiency and effectiveness. I think the key thing on value for money, though, is to stress we're not sort of saying this decision or that decision is value for money. We're commenting on the overall package of arrangements you put in place to achieve value for money.
So it's a sort of look at systems and controls, policies and procedures, risk management limits, all that sort of thing, just to make sure that.
Absolutely.
Okay.
Yes, absolutely. And of course, if we identify particular risk areas or problems, we will drill into a bit more detail on those as we carry out the work.
Okay. I mean, it sounds like it could be a very sort of a hugely onerous task, going through everything that the council does and working out, where there are things that are good value for money and where they aren't. So what are the sort of, do you have limits on what you look at?
So particularly in this first year, we look to establish the baseline. So for example, we take governance, for example, what we'd be looking at governance is how the council engages with internal audit. What we just had an example of that just at one of the previous items. How the council engages with counter-fraud arrangements, what it does about that, what it does to promote anti-fraud cultures in its organisation, what your approach to risk management is. How do you assess risk in the council? How do you report risk? How do members engage with that process? So it's all about setting because they are your core arrangements, and obviously we see those arrangements at many different councils, so we can provide commentary, analysis, challenge to that. But the idea of this first year is to set out that baseline across all of these areas without delving into huge amounts of detail, for example, in particular service lines. So that's what we're trying to do as part of this initial analysis.
Okay, thank you very much. If I'm going to second related topic, I think, related to value for money. If you had a letter from your council saying that your council tax bill was going to be 28% higher this year than it had been, than it expected to be, would you think that was good value for money, or would you be surprised by that?
I would be surprised unless the council told me that they were doing a whole range of different things for me, and that the scope of the council's work had increased. And essentially what we're talking about here is an increase in scope and a change of requirements. So if I was to roll the clock back a few years, the amount of work on financial statements that we did was far less than we now have to do. And obviously the value for money work under the previous code is far less than we now have to do. So this is less about a price increase, in my view. It's more about a scope increase. And of course, I can assure you that this is not specific to Hammersmith and Fulham. This is generic. These increases are absolutely across the board at all local authorities, and also they are across the board by all audit suppliers. So this is not a Grant Thornton thing, and it's not a Hammersmith and Fulham thing. So this is largely about scope and volume of work we have to do compared to previous years.
Thank you very much. That's a very good answer. I think you can see what I'm alluding to here.
Yeah,
this
absolutely.
is the change in price of the 2019-2020 audit work. It is a substantial increase. It's, as I say, 28%, £50,000 difference in what was expected and what the final figure was. I mean, just looking through some of the reasons given in the report, raising the bar is one of these things, which is an increase in the standard expected by the regulators. And I'm sure we wouldn't have expected a sort of a low standard audit at the beginning. We've got working from home or costs from COVID. Again, I can't really see how that adds quite as much money on as in the report. Could you just go into a little bit more detail about where these cost increases have come from?
Right. So on raising the bar, it's not so much coming from a low standard to a high standard. It's meeting the specific requirements of the regulator. So the regulator has changed its approach to what it requires auditors to do, and actually across the corporate sector and across the public sector. The corporate sector side is a bit about a response to some of those scandals of companies going bust, etc. But on the public sector side, they've just effectively dropped in that approach into the public sector side. So, for example, we take asset valuations. Now, I'm sure the finance team will tell you that asset valuations in local authorities are not the most important thing in the world, because there is no real impact on your general fund. And quite frankly, the value of if a school's valued at 5 million or 10 million doesn't really make a great deal of difference to anyone, really. But because the valuations are large estimated numbers, the regulator considers that the auditor needs to do an awful lot of work on them. And in fact, we've just had our latest set of reviews by the regulator, which concludes we need to do even more work on them than we did previously in the previous year. So that's the raising the bar bit.
So we're paying for things that aren't actually that useful to us.
Well, personally, my view is I don't think it's that useful, but it's what the regulator requires, and the council is subject to many regulators as well. You will appreciate officers might not always agree with what the regulator thinks is the right thing to do, but has to do it. And we're in the same position. We have to do that work. On the COVID, the working from home bit, part of the reason why a lot of the audits from last year, one of the main reasons why a lot of the audits from last year were so late, in fact only 45% were signed off by November the 30th, was because working at home or working remotely from an audit point of view is extremely time consuming. It's obviously time consuming for officers as well, to be fair, and involves real challenges in terms of coaching and support and verifying invoices and all those sorts of things in a way that's hugely less efficient than when we used to be on site and having that face-to-face contact with officers. And that is something that once we get rid of the pandemic, hopefully, or it mitigates enough, we would want to absolutely get back to, and that would make the audit far more efficient. Again, we'll
get a 15% drop then next year.
You'll get, if we get back to normal, there will be a change in the fee to reflect that. Yes.
Okay, thank you very much, sir. I know it's a small number compared to lots of the other numbers that we deal with on this committee, but
I
that's what we're here for.
No, absolutely.
Thank you very much.
Thank you very much. I see Councillor Caleb Land has got a hand up.
Sorry, Ryan stole my thunder there. I was kind of had some questions on the fee as well and the increase, and I wanted to get a sense of 30,000 is quite a significant overspend. You know, I just wanted to get a sense of how you were notifying the council of this overspend, because when I look at your fees for 21-22, it just makes me question, well, you've got a significant overspend this year. What's going to stop us actually for this happening next year? So could you talk me through the mechanisms that you have to protect your customers and clients from what looks to me like a significant overservice in last year's audit accounts.
Okay. Well, first and foremost, there is a, as I mentioned earlier, all fees are not just decided by us. PSAA, who are the appointing body, every fee has to be approved by them, and we have to submit a vast amount of documentation to them for them to make that assessment. So there's always that fallback position, and PSAA. In fact, to be fair, just to inform you, the 1920 fee is still with them for their assessment. So that is not actually, that's the fee that we've submitted to them, but is still with them. We haven't had a response yet on what they was. So there is a possibility on the 1920 fee, as I mentioned with the 2021, that PSAA will turn around and say we don't agree with that fee. In terms of and ultimately they are the arbiter. So if they say, sorry, it's going to be less than that, then we have to go along with that. In terms of the process for communication with the council more broadly about overruns, I mean, last year's audit, as Ellen set out, there were some issues around the pensions issue, which was quite time consuming, involved lots of consultations, lots of meeting with the council, lots of technical advice, and obviously we weren't updating the council every 5 minutes on what the additional cost was, but we were reflecting that was going to be an additional cost, and we were able to bring that together and talk to the council about that at the end of that process. In terms of this year's audit and making sure we keep to budget and manage that, I have a lot more confidence because, one, there's no known issues that are going to disrupt us necessarily, and two, we'll make sure that communication process is in place, that if we do find a significant issue, we'll be able to then discuss that with the council. It is quite difficult, though, of course, to pin down a specific cost as in the midst of the audit, because what we're trying to do is get the audit done and make sure we get it done. So we're not spending a lot of time saying, well, this is going to cost an extra 500 or an extra 1,000. We try to work that out at the end, generally speaking, but we do reflect the fact that there are overruns and delays. For example, I would be pretty confident that Ellen talked about trying to hit sort of 31st of December this year for the audit. If we were to do that, I would be surprised if there were any overruns, because that would be quite an efficient process, given the scale of work we have to do.
So just to get really into detail here, Paul, just because I want to make sure I really understand this. So presumably every month you're assigning capacity to the different audits that you're taking, and you've got an expectation on what that would look like.
Yeah.
What we have here is, it looks to me there must have been a point where you realised that, you mentioned the pension work that you had to do that was significantly over, where you'd be aware that the hours that you were planning for the pensions work were significantly more than had been expected. And I guess my question there is, are you communicating with Emily and the council team to say, look, we're almost at the threshold here, I'm going to be planning more because I think this work is going to take longer? Or are you sitting on your hands and saying that at the end of that process?
Okay, I understand the question. So are we saying it's going to be as precisely as it's taken us an extra 10 hours this month, we're going to charge an extra 10 hours? It's not as precise as that. It's not as precise as that. Are we communicating the delay? Yes, we are. The thing about the pensions issue was that it was a highly technical issue that did involve Grant Thornton specialists being involved. But of course, given the time frame of this issue, which did take several months to resolve, we weren't working on it every day or every week even. It was time and cost incurred over a period of time. Actually, a relatively low number of days, given the extended time period in which it took to resolve the issue. So no, we didn't give a sort of updated cost analysis every month or anything like that, but we did keep the council informed of progress.
I guess just to kind of voice my concern and just to get to it, it's really helpful to understand the process, and I understand it's not tricky. I mean, it's not easy.
Yeah.
but yeah, we've had a significant overspend this year, and what worries me is next year when you've talked a little bit about value for money, which seems to me to be very undefined. I don't know how much you've been doing value for money, how much experience you have of doing it. I presume it's a little bit of coming up with quotes, finger in the air of how much you think it's going to cost. So what can you say that will give us reassurance that you will have your eyes kind of very much on that bottom line figure for us to ensure that we're not, that we don't go through this process next year and suddenly find ourselves having to fork out another, 20-30% increase in what we were expecting?
Yeah. So the audit process is planned on a whole series of defined pieces of work, and we have badged, as in that letter, quite a lot of specific value to particular defined pieces of work, including the value for money. Now, we will only be charging extra and above if there is a specific weakness or problem or technical issue that causes us a delay, because this is not precise art. It's not precise, and therefore the fee we've set out in that letter to you, if there's like a delay of a week and the council responding to us on something, we're not going to charge any extra for that. If there's 2 or 3 more extra meetings we have to do to close an issue down, we're not going to charge for that. Where we charge extra work to all councils is about specific extra pieces of technical work or additional testing we have to do because a problem has arisen. We will obviously have the next audit committee, whenever that is, I think in December. We'll produce a progress report, which will be very clear on whether we've got issues or not that we need to report to you that could lead to additional fees. I can't predict that at the moment because we haven't started the audit. It's not precise in that way. What I would say is, with that pensions issue now resolved, we have a good chance to go forward and deliver the audit in the context of the budget that we've set out. But it's not a precise. The thing is, audit and audit fees is not precise. It's not a precise science.
Well, thank you for the clarity and for bearing with me and answering that question. That's good to hear. I guess the final question I had was in terms of, and it's slightly indirect, it's slightly related but slightly indirectly, is for the value of money. You talk through the expectations of the council on any recommendations that you find. Yeah. And I just wanted to understand the extent that there will be very low level recommendations and the obligations on the council to enact those recommendations when they're not regarded as materially significant, which I think there are 2 levels of. Yeah,
absolutely. That's very clear. So where it's a significant recommendation, a key recommendation, we absolutely expect the council to address. Where it's an improvement recommendation, actually, it's a judgment call for the council. So we have recommended something. Members may have a view about it, officers will have their own view about it, but we're not going to be holding the council to account on that. Probably what I would say about improvement recommendations is if we make some, it could be on an issue that could in time escalate. So it may be there may be value of the council addressing that improvement recommendation, but it's not something we're going to sort of hold the council to in subsequent years. So I'll be very clear on that.
Cool. Thank you. That was all my questions. Thank you very much, Paul, and thank you, Ellen and Paul, for your presentation. It was very informative and helpful.
Thank you.
Thank you very much. I don't know if we have any other questions from councillors. Just one short thing for Paul, with regards to maybe following on slightly from what Councillor Killiblandi was asking, but I was just a little bit interested in the enhanced auditing standards that you referred with regard to risks in respect of fraud. I mean, first, just a general question. Obviously, with regards to the fees, and I think following on from Councillor Killieblandi's point, it does seem as if there are various consultations and bits and bobs going on that look as if the requirements for upcoming years are going to be more stringent. Just very quickly, what do you think that will mean for fees?
Well, I mean, obviously we've got a 2021 fee. I think there's definitely a move in the direction of auditors doing more work, and it comes from these failures in the corporate sector. There's been a review recently that the government commissioned, where the Bryden review, where Bryden recommended that auditors should be more than just professionally skeptical, but they should be suspicious. And that almost working on an assumption that the body that's been audited is almost planning to present fraudulent financial statements. Now, that was his view in his review, but I think what that shows is that there's a direction of travel that is concerned about fraudulent accounting and requires auditors just to do more and more testing. So what you will see as part of the 2021 audit, for example, is us doing some specific procedures on expenditure to sort of assess whether there's any risk of fraudulent financial reporting. Again, this is not a Hammersmith Fulham thing; it's a generic thing, and that's the general direction of travel. New auditing standards seem to be being developed, and so there is a risk of increased fees in future years. But that again, that will be a generic thing, and I think that PSAA are trying to get more on the front foot for that and try and preset fees in it to reflect some of those new requirements. But what they are and what that level of fee might be is not something I'm aware of at the moment.
Thank you very much. That's helpful. Just with regard to the enhanced auditing standards for fraud, what's just a little bit of info? What's brought that about? I mean, is it a feeling that there is an increased level of fraud, and if so, is that fraud rising from internal fraud involving potentially members of staff, or is that external fraud? And what's kind of the response been to that?
Yeah, so this standard is very much driven by internal fraud, and it's very much driven by fraud that's not about, someone fiddling their expenses or anything like that. It is driven by the risk of an organisation producing accounts that are not true and fair, that are fraudulent, that overstate profit or whatever. Now, of course, that's largely a risk in the corporate sector, and it's a very low level of risk in local government, because local government doesn't really have much incentive to do that. Senior officers are not incentivized to hit a particular budgetary position or anything like that. But that's a good example of an auditing standard that has been taken, that's been devised to address that real risk in the corporate sector. It's been plonked into public sector, and we have to comply with it. I'm not expecting it to be a big issue in terms of outcomes. Absolutely not expecting in terms of outcomes. But as auditors, we have to demonstrate compliance with that standard, and our files and our work have to stand up to regulatory review against that standard.
Okay, no, thank you very much. That's helpful. I'm not seeing any other hands. Nobody's got a hand up, virtual or otherwise. So I'm assuming we're all happy to note this, unless there's anything final. I'm seeing some nods of the head. So I'm assuming we're happy to note the update, in which case, Paul and Ellen, thank you very much for joining us and responding to our questions.
Thank you.
Thank you. And then we'll move on to item number 6, which is the Treasury Management Outturn Report. I don't know if I've got Phil Triggs down as presenting, but no, I think we've got Matthew Dawson. And I did see a hand up from Emily. I don't know if that was an accidental hand or a deliberate hand.
Thank you, Chair. I just said I can introduce Matt if you'd like me to, if we've not had.
Yes, no, sure, of course. Thank you.
Yeah, you're absolutely right, Chair. We'd usually see Phil Triggs here, who's Director of Treasury and Pensions, but we have here today Matt Dawson, who is more than capable of standing in for him today. It's the Treasury Outturn Report, which is the annual report for the last financial year. I'll introduce it because I'm sure Matt will be much more humble in introducing it than I will. I actually think this is a really good report, a good outturn. You will see in terms of the report, and I'm sorry, Matt, if I'm now taking your presentation, a significant sort of reduction in the interest rates that we pay. And actually, it's been a really difficult year with COVID in terms of the interest rates we can receive on the funds that we hold. And actually, I think the report sets out a really good result when you compare to what might have been received elsewhere, and certainly that we never paid any negative interest rates in the last year, which was always a worry. So I very much commend you the report, and I'm sure Matt will take you through a lot more of the detail.
Thank you very much. Welcome, Matt.
Thank you, Chair. Thank you, Emily, as well. Yeah, so as I say, this is a summary of the year 2021. I'll delve straight into the figures. If I could ask the committee to look at the table at point 3. So this, in essence, gives us a position at the very, very start of the year and the end of the year. Of particular interest, there's more cash held by the authority. There's the main reason for that being we took tranches of borrowing out, which I shall come to shortly. There's also bits and pieces of COVID grant and underspend, which accounts for that increase in cash during the year. As Emily's alluded to, we saw rates crash completely in the year due to, there was an initial cut to 0.25% and then a further cut to 0.1%. So if you see the line total cash invested and the column that says rate, we finished the year 1920 on 0.77% versus a base rate of 0.75%. There was some cushioning in the year, so we didn't automatically be penalised for those interest rate cuts, because we had accrued deals with local authorities and banks when rates were still fairly healthy. So it took a long time for those accrued deals to be replaced, and it took some time for money market funds to replenish their paper. So the average portfolio rate was 5 basis points at year end. 7-day interest rates have been negative for some time, between 7 and 8 basis points. So the interest rate might be 0.1%, but actually, due to the oversupply of cash, it's very hard to get 0.1%. You are either putting out loans for an unpalatably long duration for any sort of illiquidity premium, or you're dealing with names that you don't want to deal with, or you're not permitted to due to a fairly strict Treasury policy. Table 4, it's just a useful illustration of the fact that most borrowing that the authorities undertaken is for the HRA account and not the general fund. The loans that we took out that I shall come on to were both housing revenue account loans. So it's just a useful analysis of what's what for general fund and housing revenue. So looking at where we were at March 21 in terms of the asset mix, you can see that there's very little beyond 3 months. And this was a decision taken by the team, Emily and Councillor Schmidt, to keep things liquid, that the absolute priority through the COVID pandemic was that at all times there's adequate liquidity for any unforeseen circumstances. So money market funds, daily price, daily trading, fantastic. We've kept short-term fixed deposits where our money market funds are capped. So if we needed to put anything with the debt management office, we pretty much stopped council lending. There's a little bit of bank lending, but predominantly it's government lending, low yield, low risk. In respect of borrowing at point 9, I Phil might have alluded to this in the mid-year report, but we took 2 HRA loans out at the very, very start of the financial year at 1.25 and 1.26%. Now, that's actually getting on for a 0.5% discount as to if you took those rates out today. The 50-year rate was at about 1.7% today. This was just good timing. This was as COVID was really taking hold on the markets. So we actually took a tranche out in the March, actually. So it was actually three lots of 20 million. So we jumped in, and those deals now look very, very good. At point 10, there's no real cause for concern here. What we try to show here is that there's no significant risk on your maturity profile. So where you really don't want to be with these loan maturities, you don't want a lot of debt maturing in the short term, particularly if you're anticipating a pickup in yield. That's clearly not an issue here. And actually, your prudential indicators that you approve at council actually stop you going over particular limits. So, and actually, the council prior to our recent transaction hadn't borrowed for some time. There's some brief commentary at 11 and 12 that say that both the general fund and the HRA are running internally borrowed positions, which means that your capital financing requirement, i.e. the money that you need to go out and borrow for your assets, is greater than your external debt. And in these times, that's a great place to be. There are councils that have borrowed on higher CFRs and are maintaining an over-borrowed position, which is absolutely the worst place to be in those markets, because the cost of carry, even on a loan of 1.2%, for example, if you're only getting back several basis points, it's a huge burden and huge cost of carry. It's really the last place you want to be in Treasury, is borrowing money that you don't need. On to the next page at point 12, that's the same point, just extrapolated a bit. So at the very, very bottom line, you'll see a total capital financing requirement of 385 million versus external debt of 271 million. So yeah, a healthily underborrowed position. The rest is just a reminder of what you're permitted to do as a council, what the Treasury management strategy was signed off on the basis of. 16's actually quite useful. That just shows how things have evolved over the last 4 years. So we've completely exited enhanced cash funds, and we did that some time ago. That's actually proved to be a particularly shrewd move, because they have performed extremely badly in recent times. So that was a good move. It predates me, but absolutely the right thing to do. And just our belief in money market funds for top quality liquidity, you can see the money market fund exposure is considerably more, because our priority was, we don't ever want to be in the situation where we are borrowing in an emergency from a counterparty to pay liquidity. So at point 18, finally, this is just the point I made, just with an absolute figure on. So throughout the year, your average investment performance was 0.26%. So again, that's cushioning from investing at a time when interest rates were normal, or at least when 0.75 looked like normal. Still, that is a very, very low interest rate. So the only other thing I bring up is that the prudential indicators have all been met. By far and away, the most important prudential indicator is authorised limit. So we are. I've previously said that the external borrowing is 270 million, authorised limit of 400 million. So that's, yeah, for those of you that have seen these indicators before, the authorised limit is important. Operational boundary is really a guide. So that's saying, where do you think you'll be? What's your likely position at year end? But authorised limit's the one that actually means something. And there's quite a useful maturity structure of borrowing as well. So we're well within limits there. So I'll stop there and pause for questions.
Thank you very much. That was very helpful, I think. I do see one hand up from Councillor Carmel.
Yeah, thank you, Chair. And I appreciate that this is a somewhat simplistic question, but am I correct in thinking that our cost of borrowing is currently running at 3.76% and our current return on investments is running at 0.26%?
As of last year, that's correct. The investment performance will have deteriorated since. So we would currently be on a few basis points because of the stance we've taken to keep in cash. But yes, that's correct.
Oh, I see a hand up again, Councillor Carmel.
Just wanted to say thank you.
Okay, thank you very much. I don't know if we have any other questions. I'm not seeing any other hands up, which I think is definitely a reflection of Matt's very comprehensive speaking on the report. I'm not seeing any other hands. Assuming there aren't any, are we happy to note the report? I'm seeing some nods. In which case, thank you very much. Unless there's any other comments from officers, I don't think so. Thank you very much, Matt.
Thank you very much, Chair. Thank you.
So we're happy to move on to the next item. So I've got risk management highlight reports. I think we've got David Hughes.
Thank you, Chair. So I'm David Hughes. I'm the Council's Director of Audit, Fraud, Risk and Insurance, and I'm bringing to you the Corporate Risk Register report this evening. So over the past 18 months, we've been reporting around the risks arising from the coronavirus pandemic. And tonight we're returning to report the Council's Corporate Risk Register, which we've been keeping under review throughout the period. And we've refreshed again recently with discussions at the Strategic Leadership Team the past few weeks. So whilst this report focuses on the Council's corporate risks, I want to reassure you that arrangements for monitoring and overseeing the risks arising from the COVID pandemic continue. And that includes planning for the winter, which is well advanced, including ongoing testing, booster jabs and flu vaccinations. That's covered in Risk 37. So the corporate register contains a spread of risks across the Council's 6 priorities that are set out in the business plan. And there are a number of risks you'd expect to see in most local authorities' risk registers, which are here, but also some which are specific to Hammersmith and Fulham. And the register itself is set out in Appendix 1, which is on page 87 of the pack. In the body of the report, we've included a risk heat map, the chart in paragraph 10 on page 85. And this is there to help assist with the understanding of where the most significant risk pressures are and to enable the committee to, if they wish to do so, to ask for more detailed reporting on specific risks at future meetings. So the risk register, not surprisingly, includes a number of risks where the Council has direct control over the risk and mitigation measures to reflect this. So an example of this would be the risk around the content published by the Council being digitally accessible in line with government standards. So that's something we can very easily control. But there are other risks which are included, where the Council has less direct control and mitigation measures are more about our response. So an example of this would be the climate change risk, which is one which is recognised globally as a significant risk. And our assessment here is based on the measures we've put in place locally to mitigate the impact for residents. Now, I just want to highlight that some of the risks reported tonight were added to the corporate risk register in the months before the first lockdown in March 2020. And as with the other risks, they've been tracked and monitored throughout the period. So examples of this include Risk 36, which is the transfer of the Hammersmith and Fulham Pension Fund from Surrey County Council. Risk 33, which is the impact of the closure of and the works required to Hammersmith Bridge. Risk 38, which is covering the Council's response to climate emergency, and Risk 39, which is relates to the housing repairs performance. So I'm just going to happy to pause there and ask for any comments or questions which would welcome from the committee on the register. We've got senior representatives from directorates here to provide further information on the management of specific risks, and we can take away any other questions that we're not able to cover this evening.
No, thank you very much. Well, first of all, I see a quick hand from Councillor Ree.
Thank you very much, Chair. Thank you for the report. I think that was really helpful. And thank you as well for focusing on risks from climate change as well. I'm slightly curious about this one. It must be a very difficult thing to anticipate what the risks will be and what the impacts will be. And I'm sure we can all appreciate, rising sea levels, hotter temperatures, all of this sort of thing, more freak weather conditions. But how do you go about, guessing the impact, I suppose? Is there sort of industry best practice that you can sort of share with other authorities? Is it sort of finger in the air stuff? Is it just sort of planning for the worst? I don't know. How do you go about doing it?
So that's really helpful, Councillor Rees. So what we do is focus here on the council's response to the climate emergency and what we're doing. So what we do is we look at what work is being done across London and nationally, and this is something that features on the London Risk Register and the National Risk Register, which we've talked about previously at the committee. I'm happy to provide further information on that. And we look at the arrangements we have in place, both from an emergency planning point of view, but also from a point of view of specific actions we can take to counter climate change, both within the council's own activity, in terms of its carbon footprint, for example, in terms of its use of buildings, its use of vehicles, and so on. But also, as you say, specific, more extreme weather events that might occur, such as flooding, which we've had recently in the borough. So it's looking at all those different options and the different opportunities where we have to influence and to influence and mitigate against some of the impacts that we might see. And I know that work is being done by SLT and colleagues in the Environment Department, particularly around flooding and the kinds of ways in which we can put innovative measures in place going forward to reduce the impact of flooding when that occurs again. It's something that we know is going to occur again. It's something that we need to make sure we've got appropriate measures in place.
Fantastic. Thank you very much, Dan.
Thank you very much. I wanted to focus on that particular risk again, climate change, in the sense that a few kind of things that I'd heard just sort of from friends and kind of colleagues and things like this were, for example, in Wandsworth and Putney, huge numbers of insurance claims. And obviously, I think the flooding, particularly where we are in Hammersmith and Fulham, seems like this is going to be a recurring, or potentially a recurring feature of summers to come. There is one risk here with regards to climate change. Is that, do you see that being split up in the future as we begin to acknowledge more what's going on, or get further detail, or because I think just having one risk seems at the moment, okay, fair enough, I can understand why, but I think it does seem as if there will be specific individual risks. And also with regards to the flooding, what kind of work are we doing at the moment to sort of do a review of what happened over the last few weeks, the council's response, and also, are we aware of any kind of claims being made against the council with regard to the flooding, in terms of residents who were potentially caught out, or who may have seen the council as in some way being responsible for, I don't know, whether it was blocked drains or work not being done?
So I know that, I'm sure there will be other colleagues who want to step in as well. I know a lot of work has been done with Thames Water in particular, because we do lots of active monitoring of the sewers and drains within the borough to see where there are potential pressures and where flooding might occur. It's interesting, I think at Hammersmith and Fulham we've seen less instances of potential insurance claims following the recent floods than other boroughs in central London, but that's something that doesn't mean it won't happen in the future. And as I know that work is being done in the Environment Directorate, particularly to look at a range of mitigation measures which could be put in place to mitigate or to deal with floodwater as and when it arises in a different way. But we are also, I suppose, to an extent limited by the work that Thames Water do in terms of the development of the sewer system as well. So I know that there's work being done to negotiate with Thames Water the kind of improvements and additions to the system that can be made as well. I'll take your point though, in terms of what we need to do is look at climate change and the risk of climate change, and to see whether we should disaggregate some of the specific issues. That's something I'll take away and we'll discuss with colleagues. I think for now we've gathered all these things together in one place, but it would make sense to review whether we should separate some of those out.
Thank you very much. I do see that Kim Smith has a hand up.
Thank you, Chair. My name's Kim Smith. I'm the Chief Executive here at Hammersmith and Fulham. Just to endorse the point that David's just made about maybe disaggregating this, because it is a really chunky item, and I think we'll take that feedback back and have a look at it. In terms of recent floods in Hammersmith and Fulham, I think if our Environment Director was here, Sharon Lee, she would be talking not so much about flooding, but she would be talking about Thames water and the problems that we had, particularly with sewage. We've established a flooding board, which Sharon, as the Strategic Director of Environment, is now chairing, and that meets monthly. And in light of, for example, today's yellow amber warning, our preparedness for floods, we're being very proactive in making sure that we're on the front foot with that. I'm happy to send along a briefing. I'm sure my environment colleagues would want to say a little bit more if Councillor Cassidy, you'd like to receive that. Thank you.
Yeah, if there was a briefing to be sent around, that would be very, very helpful. Thank you very much for that. I see a hand up from Councillor Kilablandy and then Councillor Carmel. So Councillor Kilablandy first.
Thank you very much, Chair. I firstly just wanted to say that, you know, this is a sad moment of the agenda because, you know, sadly, the gentleman who would normally present this, Michael Solonsky, is not here to do that. So I just want to pay my respects to that because he was so good at it, David. You know, it's good to have you, but it's a very hard act to follow.
Appreciate it, thank you.
Given that we're heading into a winter, we had the government announce measures. I noticed that, you know, under the COVID section of the report, it was red, and I just wanted to get a sense of whether, you know, how assured you were of the council's planning going into a very difficult couple months. And, you know, one of the things that we're all aware of is that the council has done an exceptionally good job over the last year and a half to 18 months, but we know that it's getting harder and harder, particularly for staff shortages and care homes and other things. So I just wanted to get a sense of kind of where we were going into what could be a very difficult winter and how the council was kind of gathering itself to ensure that we continue to do the best job that we possibly can during such difficult situations.
That's really helpful, Councillor Kilablandy. So I think from my point of view, I'm really assured about the way in which the council continues to focus and plan for what is, you know, is still an unprecedented you know, sort of situation. I know Lisa's just, you know, there. We'll may want to answer more detail, but I'm clear we're doing everything we can. That the risks are at the level they are because of the uncertainty, because what we don't know will happen still in terms of the pandemic and how it will play out. So we've got to be on our guard, as you say, I think, to make sure we've got all possible measures in place. But I'm sure Lisa would like to come in and add some more to that.
Thank you, David. Good evening, councillors. I'm Lisa Redfern. I'm the Strategic Director for Social Care. I also oversee public health as well. So David's absolutely right, but you're also right, councillor, as well, about planning for winter, staff shortages and care homes and so on. We haven't encountered that. We're lucky insofar as we've just got 4 big nursing homes in Hammersmith and Fulham. We don't have the size of the problem that outer London boroughs have, you know, the E-lanes and so on, who have lots and lots of care homes. So that's one good thing. But we are potentially heading for a perfect storm because we've got a lot more people coming out of hospital because of the backlog of elective surgery and medical patients, and also because of COVID. So people are coming out. You hear this health pack and health and wellbeing board. People have been coming out of hospital that much more quickly for the last 20 years. But it's actually accelerated even further, and people are coming out with a great acuity of need. My point is the pressure on care homes is that much greater to admit people who have got a lot of need. At the same time, there are some, by the 11th of November, care staff in care homes will have to have been vaccinated. We're on track. Most of our carers have been vaccinated. We've got a very high rate of vaccinations in our care homes. So again, we're on track. Having said that, I have just to say I've updated my own risk register, social care risk register, to reflect the heightened worry about this winter. And we're also working with providers on making sure their business continuity plans are as robust and keeping a very tight management oversight and grip over all that. But you're right to raise the question, and I'm not just going to say it's going to be easy, because I don't actually think it is.
Lisa, that's a really helpful update. It's a really helpful update, and I'm sorry to hear it. I just had a question in relation to that, which is, at our last meeting, I remember Michael being commended for the work that he was doing from the risk function in trying to ensure that the council came together. I just wanted to get a sense of, with that specific role, kind of how we felt, whether we felt well prepared, because it does feel like an important role going into a very difficult winter.
Yeah, I mean, I can start with that, David, but just again, on Thursday, I have my management meeting for an hour every Thursday morning, and the reason I'm describing that is because the audit team, Moira, who's here tonight, came last Thursday. They come quarterly, and we talked about the risk register. And following that, I've updated the risk register as well. So they're keeping a close monitor. So David's team are keeping a close monitor and covering it across the team at the moment. So I feel that it's robust and that I'm being challenged as I should be, or challenged and advised as I should be. And we were able to have a very comprehensive discussion about that. And again, Moira, I don't know if there's anything else to add, but I thought it was a very healthy discussion, given that Mike wasn't there with all his, sadly, with all his expertise and questions. I think Moira and James were able to put forward the questions about that very, very well, in a very challenging way.
Thank you, Lisa. And I think, David, I think the point from us is that I think it's important that we are challenging Lisa in that capacity as much as well as we can do. So I just want to ensure that continues, because that's certainly a priority from us as a council.
It does, and it will, council, absolutely. Yeah.
No, thank you very much for that. That's really, really helpful. And yes, I can really imagine quite how difficult this is all, but I think, thank you for the update, Lisa. That's really good. Councillor Carmel, I see, has a hand up. Do we have Councillor Carmel? There we go. Hello.
There we go. And I think the girls have finished their homework, so I might have some internet bandwidth now. Now, this is again a simplistic question, because it's full of, if you'll pardon the pun, known knowns and known unknowns. But could we have some sort of information as to what funds are being budgeted and earmarked for Hammersmith Bridge? Now, I know that the eventual costs are nebulous at this stage, but we all know that this is a significant risk to our budget, and I want to know what steps and what funds have been earmarked at this stage, please.
Perhaps it might be helpful if Emily Hill would like to come in on that. Emily.
Thanks, Councillor Carmel. As you know, the Hammersmith Bridge is a significant infrastructure asset and a capital asset. So any expenditure in which the council would need to spend on it would be a capital budget. You will be aware, and you will have seen the recent cabinet report. I'm sorry if it may not have been a cabinet report, it's a public key decision in relation to the stabilisation works that are required to the bridge to enable us to continue to keep the bridge open to pedestrians and cyclists as it was reopened last month. There were discussions ongoing with the DFT and TfL as to the detail of the announcement they made with the TfL funding settlement, and therefore how much of the final capital cost will be funded through those routes. We will continue those discussions, and as you say, quite significant engineering works need to be undertaken, engineering reviews to understand the final capital cost, but we do have a cost for the initial stabilisation works, which is 6 million. The council decided to be able to continue to undertake that work quickly and at pace. It has undertaken that work. It has looked to agree a budget of that £6 million for the stabilisation works at risk, with the expectation that we will seek to recoup the third and the 2/3, essentially 1/3 from the DFT and 1/3 from TfL, in line with the spirit of the announcement that was made during the TfL funding settlement. So the current commitment is for Hammersmith and Fulham to fund those stabilisation works of up to 6 million, with the expectation that we would recoup, in line with the spirit of the TfL announcement, 1/3 of that cost from DFT and 1/3 of that cost from TfL. As to the wider works, as you've alluded to, significant engineering works and options are being considered by world-leading engineering experts. And as those are concluded, we will look to put together the business case to discuss that with DFT and TfL. So in summary, the current commitment within the budget is the 6 million for the stabilisation works, with the expectation that we would seek to recoup 2/3 of that from firstly the DFT 1/3 and TfL another third. Significant other works have been undertaken in relation to the temperature monitoring system, which the council has invested in, and other works to keep that safe during the last period. But in terms of future budgets, it's currently that 6 million that I just mentioned.
Well, I'm grateful to you for that answer. You only mentioned the capital costs. There were significant revenue costs in securing the bridge, ensuring that boats couldn't go underneath, etc., etc. Are these costs now no longer a drain on the council's resources? And what are the likely ongoing revenue costs on top of the unquantifiable capital costs that may attach themselves to the bridge?
So you're quite right, there are ongoing monitoring costs. As though that bridge is open now to pedestrians, cyclists, it must continue to be monitored, and we must need to ensure the safety of that. That they are less than we were previously spending on those. There has been sort of changes, and a lot of that sort of safety work was additional engineering inquiries and other things like that have been concluded and that have fed into the engineering solutions being proposed. So that they're not highly significant anymore, but they are costs clearly to the council. We're currently, because they are they do change. We're dealing with sort of those kinds of costs from the contingency budgets at the moment. But the significant cost being capital.
Well, I do understand, but you mustn't ignore the insignificant, because many a mickle makes a muckle, as they say, north of the border. But one question I do have, and I have absolutely no idea, is there was a planning application I noticed for a ferry across the Thames, which would have involved, I presume, some expenditure on behalf of the local authority. Given that the bridge has reopened to pedestrians and bicycles, has this planning application been withdrawn?
So, sorry, Emily. Sorry.
Yeah. Chair, I can answer through you if that's okay. Sharon, who's the Director of Environment, can't be here today, and clearly would have a lot more information on this, but I can give you a summary insofar as I understand it, Councillor. My understanding is that the ferry isn't the role of Hammersmith Bridge, whilst Hammersmith Council, whilst Hammersmith Bridge is an asset of the council, the ferry and the transport service is an issue for Transport for London. So we have no authority in decision making over the ferry service. The planning application therefore would have been submitted by TfL rather than Hammersmith and Fulham. Hammersmith and Fulham being the planning authority, obviously, and would need to determine that planning application, but we would have no expenditure either in relation to making the application nor in relation to running the ferry service itself.
Well, just to split hairs, as the local planning authority, there is some expenditure involved in determining a planning application, right. But I just wondered if it had been withdrawn, but the Director of Environment's not here, so I withdraw the question.
You're absolutely right. We would have planning members of staff working on those applications if they're still in place, which I'm not clear either. I would say, obviously, planning applications are covered by fees, and those planning fees are meant to.
If only. If only planning applications were covered by fees, I can assure you that this council would be a far happier place.
I would be certainly far happier, I'm sure.
Thank you very much. I don't know if we have any other questions specifically on the risk register, risk management. Councillor Carmel still has a hand up, but I don't know if that's a historic hand. It's a historic hand. In which case, assuming we don't have any other questions from anybody else, are we happy to note the risk management report? Again, a couple of nods, so I'm assuming we're happy with that. Thank you very much. And then we move into the final substantive item, the audit progress report. David again.
So thank you, Charles, to introduce Maura Mackey, who's our Head of Internal Audit, to go through the report with you.
Thank you very much.
Hello, I'm Maura Mackey, the Head of Internal Audit. Thank you for the introduction, David. This is our first progress report of the 21-22 financial year. So it's not particularly full of information, but we have managed to complete 8 audits in the period, and 2 of those were substantial, and there were no limited assurance reports. So that's a positive thing. There's a lot of work still on the way. Some work started quite late, as you can imagine, in 2021-22. So we've had to sort of delay slightly the release of those audits, but they're coming through now, and there's a significant amount of work in progress. So in Appendix 1, we've listed the audits that we've completed. I haven't given any great detail on them, but quite happy to answer any questions anyone has on those particular areas. And Appendix 2 shows the status of the work at the date of this report. So there's quite a lot of work, as I mentioned, which is in draft report stage. So some of that will have been finalised since I drafted this, but we'll pick that up at the next meeting in December. And there's a lot of work in progress, as you'll see from that. The not yet due, some of that may change. As you may recall, when we brought the audit plan to the committee back in March, we explained that it was a sort of a 3 + 9 month plan. So we're only looking 3 months ahead in detail, but looking to flesh out the later part of the year as we meet with the different management teams. And as Lisa mentioned, we met with her team last week, which was very useful. And I didn't say anything at the time, but it was very useful. And we had a very constructive discussion on key risks, areas that we may or may not need to include in the plan, how we could gain other forms of assurance through the work that they already do, through other bodies of assurance, because we don't want to duplicate information. That we're having those conversations at the moment, looking forward to Q3, which is the sort of leading up to December period of the year. And we will have some more meetings in the latter part of Q3 to talk about the final quarter. But we have a fair idea of what's going to be in the last 2 quarters, but we wanted the plan to be as agile as possible to meet the changing risks, as we all realise that the past year has meant that things change very quickly, and you need to prioritise things differently. There's certain work that we will always do. It's sort of the core stuff, and we just get on with it. But we want to be responsive across the council in the areas where we're needed. That's all I was going to say, really. So other than that, I'm quite happy to take some questions.
Thank you very much. I don't know if I'm not seeing any hands from any councillors. I don't know if we have any questions. Again, I think just thanking yourself and your colleagues for the work. It's always very pleasant to see such a kind of small number of issues that we have to deal with, which is always very good for us as a committee. But I don't think there's any questions from anyone, and I'm happy. I'm assuming we're all happy to note the report. Again, nods of the head. And a thumbs up as well. Well, there we go. In which case, thank you very much, Moira, and thank you everybody else as well. We're happy to note the report. The final thing is the date of the next meeting, which is the 14th of December. So we'll look forward to seeing everybody then. Thank you very much, everyone, and thank you to the councillors and to the officers, and I hope everyone has a good evening.
Thank you, Chair.